Hello, clients and friends. This week I want to talk to you about bond prices and what has happened recently and the mass sell-off and the huge drawdown and probably what you've seen in the fixed income portion of your investments. Just to give you an example, the PIMCO Total Return Fund, the largest bond fund in the world, the largest mutual fund in the world, was down 10%. Jeff Gundlach's Double Line Capital Management bond fund was down 7%. So there has been a massive exodus from bonds because of the rise in interest rates and the fear of the average investor. Now, is that warranted? We've been talking about for some time that there is, it's not a matter of if, it's just a matter of when interest rates do rise. But my thoughts now are this is a drastic overreaction to what the Fed said at the end of last quarter. And it's typical of the average investor herding out the groupthink and the overreaction of small information, which causes a large drawdown. We potentially even see this as a short-term buying opportunity in the fixed income space as a way to to kind of be contrarian. This is something that Patrick and I talk about weekly on our radio show. You may have even seen our presentation on the psychology of investing. But oftentimes the most successful investors are the ones that are going against the herd. There's a famous quote by Warren Buffett that he buys when everybody is selling and I sell when everybody is buying. And there's no uniform blanket statement that that's always going to work out. But if you can take a contrarian position to everyone else, oftentimes you will be more successful. There are theories built on simply investing the opposite of what the retail investor does. Now, to bring this back into bond prices and to what happened with the rise in interest rates at the end of the second quarter, we see the future, the interest rates potentially rising, but it was what we see as a drastic overreaction. As of this recording, interest rates have even ticked back down a little bit. Just to give you some historical basis, we've seen a rise in interest rates every summer, really, for I think the last 6 or 7 summers, followed by a tick back down towards the end of the year. So is that what's going to happen at the end of this year? It's impossible to say. But just think twice before you overreact to a sudden move in the change of whether it's an individual stock you own or in this case the bonds you own inside your portfolio. If you have any questions, please give me a call. Give us a call at 770-984-2312. 770-984-2312. And then also, this is only going to clients. We are open for business, so we appreciate to be able to contact any of your family, friends, or neighbors. When we grow our business, the most successful and best way to grow our business is working with people like yourself. And that's how we enjoy doing things and how we see our future growing with you alongside. It's better for yourself, for you, the client, and then as we grow as a firm, growing together. Once again, thanks for thinking of us, and we look forward to seeing you soon.